Agam Gupta, MD of FI Trading at Standard Chartered Bank, joins us right now on the phone line. What's your expectations from the RBI? Because everybody was talking about a consensus 25 bips. Suddenly we also hear that people believe that RBI may front load and might do a 50 bips cut this time around. What's your view?
My view is that they'll probably do 25 basis points, and I think the important thing will be to watch out for what sort of guidance they give. But for the moment, they'll do 25 basis points, and they'll probably then wait and watch as the inflation numbers pan out over the next couple of months and take a call on whether they will be doing more later or not.
But if you remember, last April, the RBI had done a 50 basis point cut, saying that it's sort of preemptive action and there's hope that the government would follow through with fiscal consolidation. So now that the government has made some moves towards fiscal consolidation, do you think, is there a faint possibility whatsoever that the RBI might do a repeat of what it did in April 2012?
Well, if you're talking about the probability, there is definitely a chance of them doing a 50 basis point cut, although it's a small chance, because between 0 and 25, I think it's not likely that they will do a 0. I mean, so it's either between 25 and 50, and the probability of 25 is much more. 50, there's a small chance that they'll do a 50. I don't think they'll do it this time, though.
And what is your sense about, because this is the annual policy and this is the last policy that the Governor Subbarao is going to be presenting as things stand, because he steps down in September this year. So what is your feel? What kind of GDP number do you think the RBI would project? Because we've seen the government's projection, we've seen the EAC's projection, and we must also remember that the RBI has a fair amount of egg on its face, but because last year's projection had to be scaled down dramatically over the year, and we finally ended with just 5%. So what is your sense? What kind of annual GDP figure will the RBI project?
Well, I think obviously it's a bit difficult to call on what number the RBI will project, but I would think it would be somewhere in line with what the government is projecting, in that range of 6.1 to 6.7. So I would think it will be in the same range, somewhere in that range that they'll project. And
what about inflation?
Well, the way inflation is, it has been surprising on the downside, and we do expect the next 3 readings of inflation to be around 5.5%, and maybe then it picks up to 6%. So I would think between the 5.5% to 6% range is what the inflation projection would be at.
And are you hoping to see some announcement on the new bank licenses and something on maybe on inflation index bonds? What are the other kinds of things that you're expecting to see? Because this policy is the one comprehensive policy where, apart from the interest rate cuts, there are many things on the regulatory sphere that you also see in the policy at this time of the year.
Yeah, I think, inflation index bonds and all they've been talking about, so they can be issued at any time. It doesn't have to be announced in the policy. The bank licenses, again, have been talked about, and it doesn't necessarily have to be in the policy. I think something that they could announce in the policy would probably be their stand on the HTM, the hold-to-maturity portfolios of banks. That's something that we need to watch out for.
Okay, well, let Bombay take over.
Agam, how would you talk about, reducing the overall current account deficit? Because that seems to be a major concern. Do you think that as the overall inflation is also brought under control, people's appetite for gold will also diminish, thereby aiding the overall current account deficit number?
Yeah, absolutely. I think the speculative element in the gold demand will definitely reduce as inflation expectations go down. Also, the recent price action of gold does kind of lead to us believe that, the speculative element will go down. I think the real demand for physical gold will probably still remain. But yeah, on the margin, demand for gold will come off. Also, the fact that gold prices have come off and oil prices have come off and are sustaining at lower levels. Both these factors will have a hugely positive impact on the current account deficit, because these are the two big components in our import bill. So I expect it to have a very positive impact on the current account deficit.
Azam, the U.S. Federal Reserve, the FOMC, that is the Federal Open Market Committee, which basically decides the rate for the U.S. markets, is going to be meeting tomorrow and day after, and later this week on Thursday we have the ECB also meeting. What is your anticipation? There is the broad market anticipation that the US Reserve will continue its easing policy and the ECB might cut its refinancing rate. How do you think all these will pan out as far as dollar inflows into the Indian market are concerned?
Well, I think you said it. If you look at all the data that we've been getting from the US and from Euroland in the last 2 to 3 weeks, all the data has been on the weaker side, much weaker than expected. The US GDP number, the PMIs from Euroland. So I think the central banks don't have a choice, but they will continue with their easing bias. The FOMC will continue with their easing bias. They will not probably, talk about stopping the buying of government securities and other assets that they do buy. And the ECB might cut rates. In fact, the market is discounting a rate cut from there. Easing bias will continue. So inflows into the Indian market, especially into the debt market, will continue. That trend will only reverse, once, global growth picks up and the central banks start tightening. That is, I think, some time away now.
Pakam, we'll leave it at that, but thanks so much for taking the time out and joining us and giving us that perspective.